Hey everyone, so March 14th is coming up, and I bet you're hearing a lot about this potential government shutdown,
Mm-hmm.
right? And honestly, it's got a lot of people a little on edge, understandably. I mean,
Mm-hmm.
will the economy just completely tank? Are investments like down the drain? I get it.
Definitely.
But before we all spiral and hit that panic button, we're going to do a deep dive into some pretty interesting data
Okay.
that might surprise you, actually.
Interesting.
We've got research going all the way back to 1990 that looks at, how government shutdowns and the stock market kind of like do this dance together.
Ah, the historical relationship.
Exactly. Yeah. So I'm really excited to get into this and see what we can find.
Yeah, it's a common thought, right, that shutdowns mean economic disaster, but the stuff we're looking at today, well, it tells like a more complex story.
Okay, so let's unpack that. Like, what did these researchers actually look at?
Well, they focused on 6 different government shutdowns since 1990, and they left out one that was just super short, only a few hours.
Ja.
So they looked at how the S&P 500, the Nasdaq Composite, and the Russell 2000 did.
So, like, the big players in the market.
Yeah, those are 3 major indices, exactly.
Okay.
And they measured returns during the shutdown itself, but also for the whole year after.
For the whole year after. Oh, wow. Okay, I'm already hooked.
Yeah.
So, what we find, like, when you first saw this, what was the thing that jumped out at you?
I think the most fascinating thing was that, on average, all 3 of these indices, they actually had positive returns during those shutdown periods.
Wait, really?
Yeah. Like the S&P 500 gained 2.7% on average, the Nasdaq Composite 2.4%, and even the Russell 2000, which is, more small companies, gained 3%.
So, hold on. You're saying the market went up during the shutdowns? I was not expecting that.
Right.
That's wild. So, what about, like, the returns a year later? What happened then?
That positive trend and get going.
Mm.
The S&P 500 gained 21%. The Nasdaq, get this, 26%.
Whoa.
And the Russell 2000, it saw a 15.5% gain.
Okay, so if we're following this research, it's saying that these like economic disasters everyone talks about could actually be good for investors.
It's definitely an interesting finding.
Yeah, I mean, now I know no one should run off and like start investing in government shutdowns or something.
Right, of course not.
But like let's get into some specific examples because I'm guessing averages, they don't tell the whole story, right?
Absolutely got to look deeper.
Yeah.
Like, take the 2018-2019 shutdown. That was the longest one they looked at.
Yeah.
All 3 indices, double-digit gains during the shutdown, and then even bigger gains the year after.
I remember that shutdown, everyone was like losing their minds.
Yeah, it's a big deal.
But the data's saying something totally different.
That's interesting. Okay, so...
And there's another interesting thing. The shutdown in January of 2018,
Okay.
that happened when the market was, almost at all-time highs, kind of like where we are now. Huh. That is a pretty strong parallel there. It makes you wonder, right? Like maybe the market's not freaking out about the shutdown itself, but like something else is going on.
It could be reacting to something else entirely.
Exactly. Yeah. So what could explain this? This is so unexpected.
Well, I mean, most of these shutdowns are pretty short, right?
Yeah.
The average in this study was only 14 days.
Okay.
So maybe the market, it's always looking ahead.
Right.
And it kind of figures, okay, this is going to get resolved quickly, and it focuses on how the economy is actually doing, like beyond the political drama.
So you're saying the shutdown might just be a blip, like a little blip for the market overall?
That's one way to think about it, yeah. I mean, if businesses are running, consumers are spending, and the economy is, fundamentally doing okay, then this short political thing, it might not be the catastrophe everyone's worried about.
That makes sense, yeah. It's like the market has its own thing going on a different timeline than like the news and all that.
Definitely.
That's fascinating. Okay, but before we all get too comfortable with this whole like shutdowns equal stock market gains idea,
Right.
I have to ask, like, how much should we actually read into this data?
Yeah, that's a good point.
We're talking about 6 shutdowns over a few decades. That's not a ton.
You're right. You got to be careful.
Yeah.
It's really interesting research, but, there are limitations. 6 shutdowns, that's not a huge sample size.
Right.
And it's important to remember, correlation, it doesn't automatically mean causation.
True. Okay, so we can't just assume every shutdown means market gains.
Exactly.
There's more to it than that, yeah. And what I find really interesting is how this research kind of challenges that story we always hear about government and the economy.
Yeah, like it's ingrained in us to think any political gridlock, instant disaster for investments,
Right, exactly.
And this study, it's like, hold on, is that really true?
It makes you think maybe a little gridlock, like a short-term thing, might not be so bad for investors after all.
That's an interesting thought. It's worth thinking about.
Yeah.
But we got to be careful about oversimplifying, right?
Oh, for sure.
Like, we can't ignore the bad stuff that can happen with long shutdowns, especially for people who rely on government services.
Absolutely. We can't forget about the real world effects on people.
Definitely.
Yeah, I guess what I'm thinking about is this disconnect between the political chaos of a shutdown
Yeah.
and then the market's chill reaction.
Yeah, I see what you mean.
Why is that?
Well, it kind of shows how the market is always looking ahead, always trying to guess what's next, and how it reacts to things. It can be totally different from our own, gut reactions, you know?
Yeah, our emotional response.
Exactly.
Okay, let's dig into that a little more. This whole, the market looking ahead thing, it seems like a key takeaway from this whole study.
Definitely.
How could that lead to positive return, even when there's a shutdown happening?
Well, think of it this way. By the time a shutdown actually happens,
Yeah.
the market, it might have already factored in that disruption.
It already knows?
Yeah, investors are probably more focused on when it'll end and what the economy will look like long term.
So instead of panicking about the headlines, they're looking past the shutdown to what comes after, huh?
Exactly.
It's almost like the market's saying, this too shall pass,
Yeah, it's got a bigger perspective.
That's a good way to put it. Okay, so, and if the economy is basically strong, businesses are growing, people have jobs, and, we're all spending money,
Right.
then this short political standoff, it might not actually mess that up.
Yeah, it might not derail the whole thing.
Which could explain why the market doesn't just totally crash during a shutdown.
Exactly.
That's a really fascinating way to look at it. What I love about these deep dives is that they make us think beyond the obvious and question everything.
It's important to stay curious.
It's so true. And it's crucial, especially now when we're constantly bombarded with information.
Oh, absolutely.
It's so easy to get caught up in the fear and the crazy headlines.
The information overload.
It really is. Yeah, it's everyone's yelling fire. But if you take a second, look around, and maybe realize it's just a small campfire,
Yeah.
you can approach things way more calmly and clearly. So how can people listening to this actually use this idea right now with this potential shutdown coming up?
I mean, it's tough to stay level-headed when everyone's saying the world's ending.
It really is.
But this research gives us a new way to think about how markets react, even when it feels like a crisis.
Okay, yeah.
It's all about taking a breath, stepping back, and remembering that the market's on its own timeline. Don't get caught up in the frenzy. Think about the economy long term.
Term, yeah.
Are businesses running? Are people employed? Is the economy basically healthy?
Right.
Those are the things that really matter in the long run.
So it's zoom out, look at the big picture, don't get fixated on the headline.
Exactly.
But let's make this real for everyone listening. What does this all mean for how you invest and deal with all the market news?
It's about knowing your stuff and having a healthy amount of skepticism.
Yeah.
When you hear those alarm bells, remember what we talked about today?
Right.
Remember that shutdowns, yeah, they're disruptive, but historically they haven't killed the stock market.
Yeah.
Remember that the market's looking ahead, and it often does things we don't expect.
So don't panic, take a breath, look at the data, and consider the whole economic picture, right?
Exactly.
Ask yourself, is this a temporary thing, or is there a bigger problem going on?
That's a great question to ask yourself, yeah.
This has been so eye-opening, honestly. I've learned a lot, and I hope everyone listening has too.
Me too. It's been great.
It's a good reminder that even when things are uncertain, we can still learn, grow, and become better investors.
For sure. And the more you understand about the market and its history,
Yeah.
the better you'll be able to handle the ups and downs and make good financial decisions for the long term.
And on that note, we'll wrap up this deep dive.
Sounds good.
We encourage you to keep learning, keep questioning, and keep exploring. Thanks for joining us. And until next time, remember, a little knowledge can go a long way.